Gold has to be one of the easiest charts to trade when you are growing your small trading account. So we have a $50 account and let's flip it up. Okay, what have we done with a $50 account in just 7 days? As you can see, the initial deposit over here was $50, and then one of the things that I actually love about gold, even though Nasdaq is my all-time favorite, right? Gold is a little bit volatile and it gives you, that movement that you need when you have a small account. Basically just need to have a good entry. If you find that one good entry or you have that one good strategy, right? That if you just get an entry, you're going to capitalize. I literally took, I think, 4 trades. Let me just check and confirm for you guys. As you can see over here, how many trades we took in the account? Just gold. I did try to take Nasdaq trades, as you can see over here also, but then for a $50 account, the margin was going to be like $17 just on 2 trades on Nasdaq, and that doesn't make any sense because the profit that is going to give me is like $3 after a whole movement, as to compare to gold, like when it just moves a little bit, it's giving me like, $20, and then Nasdaq is giving me like, $5. So I prefer trading Nasdaq on really large accounts, where I can open a dollar lot size, right? And then on gold, I can open a 0.02 lot size and get, almost the same amount of money, right? As you can see, this is literally how many trades, 5 setups, right? We had a sell, 3 buys, and then another sell on gold. That's 5 setups from $50 throughout to $300, right? I withdrew, $255, just leaving the account at the initial amount that I had put right in there. Yeah, so I made 5 times the amount of money that I actually placed into the account, which is absolutely beautiful, right? Using the exact same strategy to make $50 with each and every setup that you see, right? And I'm going to explain the basic strategy that I was using when I was trading gold. But before we do all of that good stuff, if you're new to the channel, welcome. We trade Nasdaq over here. If you're returning, welcome back. You know what's up. Don't forget to hit the like button, turn your post notifications, and subscribe to the channel, because when we hit 10,000 subscribers, I'm going to be doing a little giveaway, finding 10 different accounts and giving 10 different subscribers free mentorship, right? And you don't want to miss that, you know what I'm saying? So I am not going to explain the whole video of each and every setup because it's going to be a really long one. I'm just going to explain the whole strategy using the last setup that I took on this account right over here. You know that I already don't like to explain trades in playback, right? I need to explain them as they are happening and then as I'm taking the trade, right? And explain every single thing that I was looking at, so this is the bear chart. As you can see over here, the trade had not yet played out and I literally just wanted to take the trade with you guys over here, right? So let's just hop onto my screen and get this thing started with. Okay, our gold chart over here on the 4-hour time frame. Obviously, let's just zoom it in a little bit so that we can all see and understand, right? We can start by drawing a little trend line over here. You always want to identify the trend. So we have our trend line, and obviously, that it's always going to be, let me zoom it in a little bit. We want to draw a trend line from a body, right? A body to a body. You can see that body right over there. There is no wick. So we want to draw exactly to the next body, right? So that we can have an accurate trend line. So you see, body to body, and then this is what it looks like. So yeah, like this, right? If you draw week to week, it's going to be a different trend line entirely, right? So right now you can see that, yes, this is all the touches that we have over here. And if we go on our daily time frame, remember from the previous video, I said that gold has broken and rejected at a major high, right, on the daily time frame. It rejected at this zone. Let's lift this thing up a little bit, right? You can see at this zone, it failed to break down to continue with the selling momentum. So it's showing us that the buys are strong in this trend, right? So we're already on an uptrend. Right now, we know that we are looking for buying positions, right? But let's remove that. We don't need it for this analysis, right? So on this 4-hour time frame, as you can see right over here, right, let's try and understand the market structure, what's happening in the market at this current time, right? We had a first touch, second touch, the third touch right now. I'll talk about how anyone could have dived into a sell just because it has touched the trend line for the third time, right? It's ridiculous because at any support and the resistance level, there are always going to be 2 possibilities, right? It doesn't matter what you are biased towards to. The market is going to do what it wants to do. So you always have to keep that in mind. At the trend line touch, it can either break out or reject at that spot. So just because it's going down and, you know, it's having 1, 2, 3 touches, right? It doesn't mean that you should automatically go into a sell at this point. Well, at least that's my thought process, right? And then obviously you already know that we are on an uptrend, right? And the market has formed that other structure before, you know, it's showing me what it's doing. I know that the buyers are stepping into this market, right? So at any support and resistance level, right? Because we are on an uptrend, I'm always going to be in support of the buyers. But if the market rejects at this zone, right, and the buyers are not, you know, going to push the market up, I am going to exit the position because it will be a wrong trade, right? So this is why I'm always open-minded when I'm trading. I know that there's a possibility that the buyers might get rejected at this particular spot, and then the sellers will step into this market and push it down. And I also understand the fact that, you know, the buyers have power here, right? And they can push the market to the top. But I'm not going to be rigid to that thing that the buyers are the ones that are in control of the market. I have to see it playing out first, and then, you know, them confirming everything, and then just respecting what the market is saying, right? Now notice at this spot right over here, right, we had liquidity at this zone. So let's just mark it up because the market always repeats what it does, right? So liquidity at this zone, it was broken out of at that particular zone and it moved up to make that second touch. That's exactly the same thing that's happening at this current price right over here. We have liquidity at that zone and there is a high chance that the market is going to break out of that liquidity zone, right? You can see it's going to break out of that zone and go to the next resistance level. Why? Because it has done it in the past and it normally just does exactly what it has done before, right? So we have our trend line over here. Don't forget, we're on an uptrend, right? So we want the market to break out of this zone, probably do a little retest and then, you know, push up to the top. That's literally the only thought process I'm using to take this buying position right at this particular zone, right? Where a lot of traders are literally taking selling positions. We're going for the buy and targeting that next, you know, resistance level that we have, you know, a little tight stop loss over here. And then this little zone at the bottom over here for a little guidance, right? We can draw a trend line like this, saying that if the market comes back down to that zone, you know, at that level here, it's first touch, you know, second touch, right? At this zone, we have a third touch. If it goes back down, you know, and breaks out of that zone, it's already no longer a buy. So that's where we'll put our stop loss for, you know, it's going to be selling if it goes below that. For now, we are just going in with our buys. And then, yes, we are targeting that zone right over there. That's literally the simple analysis. Let's just watch the trade running now and see how it plays out. Just going to fast forward the trade as I am speaking to you guys, and you can already see that, you know, that's how we capitalize on the trade. And then right now, even though we closed early, we could have made a good $500, you know, $700 from this trade. But then, you know, I closed early because of this rejection right over here. What I was explaining, right, that the sellers looked like they were stepping into the market at that particular zone. I could have gone in for a re-entry later on after I had seen the confirmation from the buyers, but then I was already, you know, like satisfied with what I already had, and then, you know, I just exited the position. But you can see that the overall trade, you know, played out quite well, just then pushed up to the top. So that's just how I managed to capitalize, you know, from this particular trade. As you can see, it played out quite well. You know, I don't regret leaving, right? Because if I want to tell myself that I regret leaving this trade and then if it had played against me, you know, you never think like that as a trader, right? But then I'm just happy that the setup really played out well. I could have capitalized more from it, but then, yeah, $50 throughout $200-300 trading gold with just 5 setups is actually pretty good, right? But if you did enjoy that video, don't forget to hit the like button, turn your post notifications, and subscribe to the channel. You feel me? With that, it's been Tino, and I'm out. Peace.